Good morning, traders. Welcome back. Forex market video analysis at your service. Today is Monday, opening the week. We want to talk about a fresh position was just established, Aussie versus the Swiss franc. Wanted to introduce the situation. It's a familiar situation for you guys because we've been back and forth on the relationship with the Aussie Swiss. Last time we were here, we were on our way attacking 70.27, and boy were we misfortunate about that. We came really close but missed the target by literally 4 pips, right? Having said that, we still made good. We did well. Let's just say that we did well. We were able to jump out before the ship sank, but obviously we didn't take as much profit as was intended, right? If we were hit the target at 70.27. At some point when price action crossed below 69.36, that was the moment we basically got rid of the last trade. Again, it was mildly successful. Not much to write home about. But the thing is, when price action kept drilling downwards, at some point we felt that it's about to have a massive breakdown, full-fledged downside breakdown. But it ended up being just a flinch, where price action was just setting up bearish trap here, so it was faking the break. So when we got back to the drawing board, having that reanalysis on the situation, we noticed that price action didn't really dip below 68.54. Check it out on the weekly perspective. It's quite interesting. So first of all, the fact that it missed that 70.27 is very suspicious in the way that it was supposed to land on that upper section. Since it didn't, it could suggest that that was a correction period, nothing more than that. So what was it correcting, you might ask, right? I would say this, check it out, this is a correction for this move, right? This is the first downside segment, but it's a complex leg. In this case, that's what they call the three leg move, right? So we have 1, 2, 3, where the second is a just pure correction of the first one. That's why it didn't reach that 70.27, because it was not intended to be a standalone leg, right? Sometimes it's confusing, but we have to gauge every piece of new information that's coming in. That's what we're doing. So right now, looking at price action failing, I mean that's just an impressive failure. You have to admit, 68.54 is here to stay. Time and time again, price action comes engage, and that level just keeps pushing it away successfully for the first, second, third, fourth, fifth time this week, right? I mean, this week, of course, following the close on the weekend, which was a big one, right? So price action didn't really drill below 68.54. Now we know it using our X-ray vision. And we also know that it's turning around. We also know that it didn't reach 70.27 when it was supposed to. And let me tell you what else we know. We know that there's a very good chance that this tipping point, this bottom, is the beginning of a much more profound upside trend. The kind that breaks out completely and sets price action free. Right, because it's been trapped inside of this range for a long time now. We can track the beginning. We can track back all the way to the beginning. It's around late March. So this is literally like like a pressure cooker, and it's about to explode. It will explode at some point. I think it's gearing up for that breaking out moment by turning up right now, turning around and facing upwards. As you can see, pulled the trigger, 15k right off the bat, stop loss level 67.90. It's going to be super interesting to see where this is going to take us. second attempt on the Aussie Swiss franc. Since we didn't take any damage last time, we can easily jump right back into it. So there you go. That's about that. Aussie Swiss, ladies and gentlemen. We'll be back to follow up on the situation, that's for sure. Moving on to the next one. So see you there.